Hi everyone. Our guest for today is Jayant Kumar. He's an ex-Indian Express CTO, ex-SVP at DBS Bank, and now a mutual fund specialist. So thank you so much for joining us today, Jayant. To start off with, can you tell us a little bit about yourself and your background?
Thanks, Mihir. Thanks for having this podcast with me. Yeah, so about my background. So I actually graduated in 2001, and then I started working as a software engineer. I skipped a lot of companies, right? I worked with a lot of different organizations throughout my cycle career life. I think the leadership ones that you called out is one is DBS Bank, where I was heading both India and Singapore, teams out of Hyderabad. And then I was CTO at Indian Express, and I had quite a long tenure working with Nokia.com. Yeah, I think those are the key ones. The last position that I held was as director of engineering in Turbo. Yeah, I think that's the pretty much career path that I took.
So can you tell us something about like what kind of work were you doing before pursuing financial independence?
So I started off as a software engineer. Then I moved into technical architecture. So I was the key architect for building Nokia.com. Uh, Nokia.com has what do you say a product called as Resdex, which is used by almost every organization in India. And I think it still accounts for more than 60% of their revenue. So that's the product that I built. I was the key part in designing and building that product. This was long way back, I think in 2004 or something like that. And once I did that, then I moved completely into architecture, and I designed the microservices architecture for Nokia.com. That is during the second stint. I also worked with Shine.com in the middle, where I designed their architecture. So a lot of things around architecture, and then I think in Nokia.com itself, I moved to leadership position in my last, I think last 1 year or 2 year. And then I moved on to CTO as Indian Express, where I was working with the technical team and the CEOs to define their technical strategy. As the head director of engineering, SRE engineering in Turbo. That was, I mean, I when I joined that company, I already knew I joined that company at a very pretty high salary, and I already knew that I would not last over here for more than a year, and that was my target. That at least if I finish a 1 year over here, then because I had already made my money, and I was like, right, this is my exit strategy, right? And I wanted them to kick me off and give me a good severance.
Nice. Okay. When did you first hear about fire and what attracted you to that concept?
Uh, the first time I heard about fire was, I think, after COVID. So basically, I was planning my exit strategy. My exit strategy was when I moved to Hyderabad, right, in 2018 or 19, when I moved to Hyderabad. That was when I was planning my exit strategy. My exit strategy was that I will stay in JP Morgan. I will stay there for, uh, it was one company where you could just slog throughout your life. And I've seen people doing that. So my exit strategy was that I will slog there for 10 years and then I will retire. But when I joined there and then COVID happened, and that is when I realized that, I would not last in this career long. So that's when I started figuring out what to do. And then that's when I came across the fire term and started not planning, but yeah, started thinking in that direction.
Got it. So when like when did you start thinking seriously about financial independence and like what did your finances look like at that time?
So I started thinking seriously. So this goes back to a stage in my life where I was let go of for the first time in my career. And this was, I think, in 2011. I think so. 2011, I was working with a startup called Insta Media, and they were short of funds, and I was a high-paying resource for them. So I was the first one to be let go of. And at that time, I had a home loan, I had kids, I had school, I had everything, and I was devastated because I didn't know what to do. Right. I was lucky. I got a job within a week, but that 1 week of time was enough for me to think that, I need to figure out something. So after that, when I was, I think 2012 is when I actually started discussing this with a lot of friends that, what is your retirement strategy. What do you need? How much do you need to retire? So that was the initial thought, initial trigger. And I think 2014 actually started investing heavily for retirement. That was when I actually created my strategy that I will invest, invest, invest. And I also got in touch with a mutual fund distributor, not a mutual fund distributor, but mostly a financial planner, who actually uh, made a fool out of me, to be very frank. But yeah, that was when 2014 was actual time when I actually started thinking and planning.
Got it. So can you talk a little bit more about what that financial advisor, because I want to, educate people on that as well. I know you are yourself a mutual fund advisor right now. So if you can, maybe spend a couple of minutes on that.
Yeah, definitely. So basically, there are different types of, and it's very rampant in this industry, in financial industry. You would see people selling you things left, right, and center. There are people who would sell you insurance. There are people who would sell you mutual funds. There's a difference between selling and investing. And selling is when you are doing something for your commission. Investing is when you're doing something for the benefit of the person you're doing for. So I already had term insurance at that point of time. And what happened was that financial planner, she showed me another term insurance. Maybe she was right, maybe she was wrong. But what I didn't like was that I was not informed that what would be my cover, right, and how much did I need. So when I started planning for financial independence in 2021 after COVID, that is when I realized that it was a missell, right? Because I already had. So if you look at it from the point of view of term insurance, why do you need that money? You need that money to cover in case you're not there. But if you have already reached that stage where you have that corpus, you don't need term insurance.
Maybe she should have told you that, you
Yes,
know,
yes. So that was a mistake. And then I didn't know about commissions. I think during those days there was nothing called trail commission. There was only one commission. So once you get the investment, you get one time commission, and then you're done, right? And that's where things got messy because she got me invested in a few funds, right? And to be very frank, there was no plan, right? It was like random investments. Sir, take this. Sir, take this. And then when I saw my CAS statements and I figured out how much commission I'm paying, and the funds are just like that. I mean, she got me invested in 4 or 5 funds, and I didn't even know why those funds were there because she I mean the way I do it is I do a complete goal based planning, right? And I have to figure out that
right.
this is your goal, this is what you should invest in. So the purpose of investment is number one priority is safety of your capital. It then comes growth. If you're not safe, you will never grow. So that's I think the second thing that I didn't like because random investments, investing in 20, 25, 30 funds, and which I eventually I when I talked to the second financial advisor after COVID, that is when I actually figured out what what curry I had created, what raita I had created, and how do I have to manage it now.
Makes sense. Okay, so coming back to your journey, what are some of the biggest decisions that helped you move towards that financial independence goal, right? Like, was there any one turning point that accelerated the progress?
I think my salary helped me quite a lot, and my investment ratio was also pretty high. Saving ratio was also pretty high. I think at one time I was doing approximately 60-70% of my salary was going into mutual funds. So that helped me a lot. Yeah, I think that is a key turning point. I don't think there is any key turning point, but yeah, once I made up my mind that I had to get out of it, that is I think which helped me a lot.
I think for most people, like the mental turnaround is their biggest, acceleration, right? Like the day you figure out, okay, I want to move towards this is when you have to start planning and backtracking and things like that. And I think that time you know that, okay, I already have this much corpus and I need to get here. So then you have a path forward, which you can see yourself becoming independent in, these many years, right? So I think that is a lot of people's, turning point. So yeah.
Yeah,
think same thing
exactly. And
for you.
I think to be very frank, I lost quite a few years just thinking about it. Right? Because 2012 is when I started, initiated this, but that thought stuck my mind. But I started investing not up to 2020, right? So there was almost 3 years that I lost just thinking, okay, I'll start. And then, things keep happening and you just keep on delaying that thing to the next day, next day, next day. And the next day doesn't happen.
Right. Yeah, makes sense. Was there any specific fire number target? I know, like in in this community, or with the people that I'm talking to, there are number ranging from, let's say, 1 to 2 crore to anywhere like 40, 50 crores, right? So according to you, and you've been financially independent for some time, so is there any number that you had specific initially when you started, and then when you became financially independent, did you figure out that maybe that number was something completely different?
So the number, again, there is no particular number because it's personal finance. The reason it is personal is because it is very personal to the person who's figuring it out. So two people living in the same community, working in the same corporate office at the same level would have two different fire numbers because their expenses would be different. Right? So the fire number is basically dependent upon your expenses. I initially started off with 25x, which means 25 times my expenses. When I created my plan, it came down to 35x, and I added buffers on top of it because I wanted that buffer to be there. I mean, to be very frank, having a number in your mind is not the right strategy because that inflation would change that.
Hmm. Right.
The
So can
point
you
is,
explain a little bit about this X that you're talking about?
yeah, and I will definitely explain that. So basically, how is a number derived? Right? The number is derived, and this is so there is something called as your corpus, and there is something called as how you allocate your assets so that your fire journey, your retirement, the early retirement journey is very stable. Right. So we'll talk first about the number. Right. When I say 35x, 35x x is your basically expenses. It does not The number does not depend upon your income. It does not depend upon your you know savings. It depends upon your expenses. So if you have an expense of 1 lakh in a month, which means 12 lakhs in a year, you just take 35 times of that. That is the that is the corpus that you need for your living expenses. So that is this. There were multiple studies conducted in US, and this is backed by data, which says that 25x is enough to live a very peaceful life for the next 30 years. And keeping in mind India's inflation and a bit of what do you say, I mean, inflation and the amount of money, number of years that are there, I believe 30x is more than enough, right? But then there are different types of corpuses also. So, for example, we say lean fire, we say fat fire, and this depends, right? A lean fire would be around 25x, a normal fire would be around 35x, and a fat fire would be around 45x, which means you have 45 years of expenses that that you have. So that is the corpus calculation strategy. Now comes how
Got
do
it.
you allocate that money, right? Because if you are retiring at 40 and you have to survive up till 85, 90, which means that you have at least 50 years of life left. But if you are doing it with 35x, you only have 35 years of life left. And if you keep that 35x, right, that becomes even less because your FD returns are less
Right.
than inflation, right?
Right. Right.
So the purpose of
Especially in India.
yeah, so the purpose of having asset allocation is to ensure that you are safe when you need money. You have enough cash flow, right, in the future years for all your expenses, and your money also beats inflation. That is the purpose of asset allocation. So the way, I mean, there are different strategies. Again, there are different strategies for asset allocation also. There is a 70-30 strategy, 60-40 strategy. There is an income-based strategy. There are FD and equity strategy, right? What I follow is different. I follow a 5-5-5 year strategy, right? So I have the first 5 years money I have in my bank. The next 5 years would be in hybrid funds, and the remaining years would be in equity. Every year I rebalance, take out money from one asset and put it into another asset so that it's all the buckets are there. This is called the three bucket strategy, right? It depends upon which strategy suits you the best.
Hmm. Got it. Okay. So how has your life changed, since reaching fire? Like, what surprised you most about this phase of life?
My initial thought was that after retirement, I'll just do nothing and enjoy my life and just roam around, watch movies, play video games. But after 4 months of doing that, I realized that it's pretty boring to actually just keep enjoying life. I think that was a surprise for me because I had thought about doing something, but I never thought that it will be so monotonous if I just keep on doing nothing in life. So that was a surprise for me.
Right. What are some of the things that people often misunderstand about fire?
I have been talking to a lot of people now because my initial purpose, I I I plan for retirement. I don't plan for investment, to be very frank, right? I don't chase returns. So the most important thing that people do for fire is that they just you know uh, chase returns, right? Gold is going up, so you start investing in gold, right? Tomorrow silver is going up, so you start investing in silver. Eventually what happens is that all your money is invested in different assets, and when you need money you don't know where to take it up from. So that I think, and that's what I've seen. I have seen to be multiple portfolios, and it's a mess, to be very frank. People have 50 different funds that they've invested in. I myself had 50 different mutual funds invested in because I didn't know that. And today I'm still trying to bring it down. It should not be more than 10, to be very frank. It should be in single digits. So that's a mistake that I have seen people do. The better strategy is to figure out, what is the purpose of your investment and where are you investing for that purpose. So instead of deciding on the fund, first decide on the fund category based on your goal and then figure out which fund you want to invest in. And instead of doing that, just look at the, I mean, of course returns are important. I would not say that returns are not important. But yes, anything above 12, 13% is more than enough. If a fund is giving consistently, 14, 15% of returns, you can blindly, instead of going for the top performing fund, you can blindly go for that. That is what I recommend.
And do you think those type of investments and those type of returns are fine if you want to, achieve fire in the future sometime?
Yes. See, it's all a game of balancing risk. I mean, I was designing fire for one person in my community. Uh, what what I said was that you can fire today. The corpus that the person has is around, I think, 10x only. I said that you can fire today, or you can fire after 3 4 years. The difference between firing today and firing after 3 4 years is that you will have better safety after 5 years because you will have built that safety bucket. If you fire today, you will just have 2 years of money sitting in your bank. Rest all your money would be deployed in different funds. If something happens in the market, we saw yesterday market fell because of the war
Yeah.
situation. If something
Yeah.
happens, then there is no way you would be stuck. So it's all about managing risk.
So looking back, Jan, what's one financial mistake that taught you an important lesson? Like, is there anything you would do differently if you were starting again?
Yes, I think I made a huge mistake in buying real estate.
Hmm.
I invested. I got. I mean, the property I had three properties. To be very frank, I let go of one after COVID. I did deploy the money into mutual funds. I think the property appreciated after that, but still believe that I did the right thing. I still have another property which is in a very prime location. It is a really good property. I bought it at around, I think, 50 lakhs. Today it's worth 2 crore. It's still, it's, I mean, it's renting out is, I mean, you don't need to actually search for tenants over there, right? I mean, the guy leaves the property, the next day another tenant is ready. It's a prime, and
Yeah,
this
good to
growth,
have such property.
yeah, and this growth is happening. This growth from 50 lakhs to 2 crore has happened over 15 years. Okay, so and to be very frank, I I had a lot of ESOPs which I sold, and I paid off my home loan, and I regret that because those ESOPs have grown 20% or 20 times. If I would have kept that, 50 lakhs that I have
Hmm.
invested in that property, which is now 4 times, I would have been at least at 10 CR.
I think spoken to a lot of people, and most of them say, that property investment is one of their biggest decisions, which have just devastated their journey towards fire, because so much of your money is deployed into real estate, and then you don't have enough to start investing. And then once you realize that you have so much money invested, it's not liquid, and you are not able to sell that house, you're not able to get tenants, and then I think it's just maintaining that house is a hassle, right? And if you are saying that your that property is in prime location, there is no issue of tenants, and still
I
in
still regret that.
15 years, yeah, in in 15 years, it's just gone up 4x. I think that's a big loss for people who in their initial career years, invest into property. So I think coming back to this property thing, right? Like, I think a lot of people still want to figure out, once you have fire, is it a good idea to buy a house, or should you still keep renting?
It is a personal choice. Real estate investment is an emotional decision. It is not a investment decision. That is what I say. So it is a personal choice. Ideally, you should have one property in your name so that in case of any exigency, you can just go over there and stay there. You don't have
Mm,
to pay rent. But
mm,
having said that, there are people who still figure out that renting is cheaper, and that gives them mobility. So, for example, if you are retiring in your 40s, you still have at least 15 years of your life where you can actually roam, you can travel. Don't have any lifestyle diseases yet. BP and sugar is still far away, 15 years away. Right? I recommend that if you are looking forward to travel, why do you want to get a property now? Because it's not going to appreciate.
mm.
You should get a property when you want to settle down.
Yeah, makes sense. Okay. So I think family plays, an important role in this fire journey, and because they are one of the people who are most affected by these decisions that we have in our life, right? So from your perspective, like your family support, and how did they take it? Like your wife, your kids, your parents. Like, did you factor in those things when you were taking a decision to become financially independent? What was their reaction?
To be very frank, still haven't told my parents. They still believe I'm doing the business. I have moved on from uh, salary from a job and now I'm doing business. So that's what I have told them because I believe it is very difficult for me to explain the situation to them. And they would not understand. My dad worked till I think 70. He retired at 60. Then he went to Nigeria. He stayed there for 4 5 years. Then he came back to India. Then he worked in his friend's office for 5 more years. So he stayed. He worked till 70. He's now 80 plus, right? And he still expects that he still expects to work. He still keeps on forwarding me emails that I've got this interview call. I was like, please.
Yeah.
So I don't believe they will understand this. My kids are happy because I am at home
Mm,
most of the time. I am
mm.
responsible for uh, dropping them to tuition, picking them up from tuition, from their birthday parties and all those things. So that's what I am doing. I am the always available father. My wife is, I think, she is okay. She doesn't. She has her own life. So she actually wanted to work, but she stopped working after the kids came to the picture. So now she has started working. She started working after COVID, I think. Yeah, 2 3 years after COVID. and I think this is the second year. She's
Hmm.
enjoying corporate life to be very frank, before she gets bored of it. I think the good point is that we have adjusted pretty well. I was not a bit apprehensive that we might not get adjust, but yeah, I think we have pretty much adjusted to this lifestyle.
What about like friends and people in the community? Like, oh, Jayant, now are you financially independent? Like, what will you do with your life now? Is that something that they ask?
They ask me every time I meet. I mean, I just met them this Friday, so they were like, "What are you doing throughout the day?" I was like, "I spend my day. My day is all figured out." So they still ask me what I do to spend my time, and I have pretty much good, well-defined schedule in my life now.
Yeah, that is pretty important, right? When you have a like when you are working, I have to go to job from this time to this time, and then maybe some other activities throughout the day. So the days are pretty planned out when you have a full time working job. But after you are independent, I think if you are in that kind of mindset of keeping your day occupied, then I think that sits pretty well with people who have been working for a long time. This planned structure is something that people often fall back to.
Yeah. And people are there are people, because I'm not talking to a lot of people. There are people who already have the corpus, but they are afraid to their job because they don't know what they will do after retirement. They don't have any hobbies. I have my hobbies. I play video games. I go for bike rides. So I have my hobbies. I have pretty much good amount of people. Once you go out, you actually figure out there are a lot of things to do. Right.
Right. So then for someone in that is who's hearing about financial independence and things like that for the first time, what advice would you give them? Like what habits matter the most? What should people focus early on in their career?
So the first important thing is to build your emergency corpus, because in today's scenario, a job is something which is not static. Anyone can lose a job today, tomorrow. I mean, that's become more volatile in recent times. So building your emergency corpus is important. Second thing is that create a plan and allocate funds to those plans. Because once you have a plan and you have a fund, you know that this is how my cash flow would look like when I retire. I mean, to be very frank, no one would be doing 100% of the plan. If you have 5 goals, you have maybe 5 or 6 funds allocated to those goals. Whenever you do a review, you will figure out, you will see that this fund is performing better. Let me switch. So this will happen. But the most important point is to have that plan and to have a focused approach towards investment. Because too many switches, too many funds, they actually create a chaos which is very difficult to solve later.
Right. And one question I like to end with is, do you think pursuing financial independence was worth it?
Yes, definitely. To be very frank, I am surprised how much time I used to take out from my life for work. And I still am not able to figure out how I used to take out that much time. Because now, today, I don't have time. My complete day is well sorted out. And even weekends are sorted out. Right. I have
Hmm.
my bike rides planned. I don't know how I used to do that, all those things earlier. And once we are in a comfort zone doing our job, right, it becomes very difficult for us to look beyond that comfort zone, right? Because it helps us have a time span. My 9 hours are fixed. I know what I am doing in my next 9 hours. But that once you get out of that 9 hours and you try, to do something, you try to struggle, you try to figure out what you're doing. That is when your actual growth starts. That is when you actually understand who, as a person, you are. What is your purpose in life? So yeah, I think it was totally worth it.
Okay. All right. So Jan, thank you so much for sharing your story and insights today. I really appreciate you taking the time to talk about your journey. So yeah, thank you so much.
Yeah, thanks. You're great talking to you.